Hello everyone, Pigmoney here with an update on the stock investment challenge I started at the beginning of this year. The month of May was dominated by positive news for the markets, which clearly reflected on my portfolio. Things are looking quite alright, but let's see what happened in May and what I expect from the month of June. In my last video, I said that the 200-day moving average on the Nasdaq 100 will be the key to figuring out where the price is heading. I also said that all it takes is some good news about tariffs or the economy and it would serve as a catalyst for the market rally. That's exactly what happened. Some tariffs were paused, in other cases deals were made, the entire global economy got optimistic seeing that there is a dialogue and a willingness to cooperate and reach agreements. The good news is that the price quickly broke above this line, and even better news is that it remained above it. For a successful confirmation of the upwards momentum would be to retest this line at least once and bounce back up again. If we see a movement in the price action similar to this, it means that the bull market that dominated the stock market since the beginning of 2023 will continue. When the markets corrected back in April, I deployed an additional $1,000 to buy the dip and apply some dollar cost averaging on some positions that were red. After the price bounced back, I took profits on some of these baskets just to make sure that I have some available funds in case I need to jump back in if there were another major correction. In other words, I increased the position sizes in stocks that were mostly affected by the dump, and then when the prices recovered, I reduced the positions back to where they were previously, but with a much better average entry. Right now, I have over $500 in available funds ready to deploy. This way, I have better average entries, almost 10% in gains this month, and some excess liquidity. This is an ideal scenario. I am very happy with this setup. Now, even though the month of May was mostly about dollar cost averaging and repositioning, I actually started to diversify a little bit by buying one stock of Howard Hughes Holdings. This way, I will have some minimal exposure to the US real estate market. Now, this was a risky entry and the housing market might be in a bubble right now, but I believe that the market has already priced in this type of risk, and in case it turns out to be a bubble that will not pop anytime soon, the value of the stock will likely increase. This is yet again a long-term hold on my part. In case there is no satisfactory price movement, I will have no issue with selling this single stock from my portfolio. Now let's see the charts and what I'm expecting from a technical point of view. Actually, I would be most happy if the Nasdaq retraced a bit more and retest this line just to see if it holds. If it does, then I expect the price to continue its rally and have a few shakeouts along the way depending on global news. For the time being, however, I will just sit back and watch what happens. I don't need to take any action at this point. This is the beauty of investing in stocks. I don't have to be glued to the screens all the time. So the month of May was mostly bullish. My balance is up almost by 10%. I am slightly optimistic about what's going to happen in June. Interest rate decisions and other macroeconomic factors might affect how things are going, but I will probably sit the next month out and see how things are going. Alright guys, this was the stock investment update from the Pigmoney Reloaded series. See you in a month's time. Until then, take care. Pigmoney out.